Well, the Trump administration is reportedly looking to consolidate bank regulators without going through Congress. According to a report from the Wall Street Journal, President Trump's team is discussing plans to collapse the functions of the FDIC into other regulators. The FDIC was created in response to thousands of bank failures nearly 100 years ago. It insures depositors for certain account types up to $250,000 at more than 4,500 member banks. It also supervises financial institutions for safety and for consumer protection. It's funded by insurance premiums the banks pay. Joining me now to discuss the potential change, Bill Isaac, former FDIC chair. Bill, we always tell people, look for accounts that are FDIC insured. What could a potential consolidation look like and mean for consumers?
Well, I hope that what's been rumored is not going to come to pass. I think it would be a serious mistake to decide to get rid of the FDIC or to merge it into another agency. I do think there can be some reforms made that could make some sense. For example, if I have been proposing that the Comptroller of the currency, the FDIC, and the Federal Reserve, their workforces of examiners, be merged into a single agency. That would still leave the Fed outside of that single agency and dealing with monetary policy and so forth. And it would leave the FDIC outside of that consolidated agency, and it would be focused on making sure that the FDIC can handle bank failures. The last thing we want is to have the FDIC and the Comptroller of the currency together and sharing responsibilities for bank failures. That's just inefficient and ineffective, and not going to work. I think some consolidation could be called for here, and I wouldn't be opposed to it. But I do think that the FDIC has a very important role as an independent agency responsible for handling bank failures in a very effective and efficient way.
So, Bill, talk to me about that, because supporters here would argue that bank regulation, it's too fragmented. They see some merit in consolidation, just like you just said. What should that consolidation sort of look like in your view without sort of combining these agencies and softening the FDIC as a result?
Well, what I have proposed is that the Federal Reserve get out of bank supervision, and the Comptroller and the FDIC get out of day-to-day bank supervision, and the Comptroller of the currency be given responsibility for bank supervision for the three agencies. And then the FDIC would maintain responsibility for handling bank failures and taking enforcement actions where banks are not behaving properly. Mm-hmm. I do think that the FDIC needs enforcement authority and to oversee what the Comptroller of the currency is doing.
If these changes were to go through, how do you think banks would read that, and what would they do in response?
Well, I think if what I described happens, I think the banks would soon learn to live with it, and I don't think it's a big issue and a big problem. I do think that if the FDIC is neutered, i.e., it doesn't have any authority anymore, I think that would be a serious problem, and I do not recommend that.
All right, Bill, we're going to have to leave it there. Thank you so much for joining us today. We appreciate it.
Thank you. Take care.